Are Claudio and June in the attendees? Maybe Claudio and June, you can send a message to Katie. She's going to add you as a panelist. All good? You want?
Can you try to do it? I couldn't.
I don't see Claudio. Where is he?
No, for June, for
okay.
The camera.
I
think
you have to add me as a panelist or something before I'm allowed to show my camera. Or I can rejoin the call. Should I rejoin the call?
I think so. Did you get the panelist invite? If you can just rejoin us. So should be okay. Sorry guys, still people coming in, and apologize for the delay. We are just waiting one panelist to join us.
Sorry, Kathy, can you send me the panelist invite again? Because I don't think I have this invite. I'm using the generic link that you sent.
1 sec. Did you get the invitation?
I have a meeting invitation, yes, but
okay.
Might not be this panelist invite thing.
Okay, let me send you something. Can you try this one? Right, Katie, all good with Claudio?
It still not doesn't work. He will try with his phone. Just
okay. I think maybe we can start if you don't mind. And Claude, you can join along the way.
Yeah, so let me start. So welcome everyone. Thank you for joining us today webinar. So my name is Kathy, and I'm APAC Marketing Manager at ConsenSys. So today we have an amazing panels on digital payments and stablecoins. So where we will talk about the global trends of the digitalized payment, and also how it could possibly generate new business model from the use of the blockchain-based digital programmable money. So I can guarantee you this webinar will help everyone to understand enterprise blockchain, and also explain how digital is, how technology is changing the payments and financial service industry. So today we are very honored to have our industry expert to join our the conversations. We have Max, CMO of Atato. And then we have Claudio. So Claudio will join later. So he is the director of strategic initiative for Australia and also Southeast Asia at ConsenSys. And then we have Dylan, is CTO of BAXE, and June, he is the protocol lead of HaloDAO. So so here's the format to just give you an idea what to expect today. So we will start with taking a few minutes for each of the panelists to briefly introduce themselves, and then also to tell a little bit about their background in the industry, and then I will Max will kickstart of the conversations, and I'm so glad that Max is the moderator today here. I'm sure that it will be a very fruitful conversations, and in the second half of the of our time, we will start to open up the floor for the Q&A sessions. And by the way, please stay with us until the end of the webinar, because we are going to have some nice giveaway gift. So I will be announcing at the end of the Q&A sessions. So maybe let's get started with the panelists' introductions. Do you want to go first, Max?
Sure, and yeah, maybe we can stop the screen sharing. And yeah, hi everyone. My name is Maxime Paul. I'm the co-founder and the CMO of Atato. As you can hear, I'm French, but we are actually based in Thailand and Singapore. We have been ConsenSys partner for the past 2 years, and what we do, we offer digital asset custody for exchanges, funds, but also companies holding cryptocurrencies. And during those past few years, we have been working with ConsenSys on different projects. We have been quite honored to be part of the CBDC project with them at the end of 2020 in Thailand. We can talk a bit about that. But yes, welcome everyone. Just to finish, ConsenSys and us are actually joining for the Bangkok Blockchain meetup. This is an event we actually do every month, where we bring panelists and companies to talk about blockchain. So welcome everyone, and nice to talk to you.
Dylan?
Yeah, so my name is Dylan Blankenship. I'm the CTO of BAXE, been in China for about 13 years. Done a lot of executive technology management at IBM, as well as CTO of real estate portals, and now I'm heading up technology at BAXE. So nice to meet everyone.
Next, Claudio, maybe.
Hi everyone, this is Claudio. I'm the director of ConsenSys in Australia. I'm based in Sydney, and I look after strategic initiatives for the company in Australia and Southeast Asia. I've been with ConsenSys for about 4 years now, helped the company get established in this part of the world, and slowly recruiting a team and building a number of activities of the company. Before that, I was at UBS, so I have a background in financial services. I was part of the UBS blockchain lab since 2015, so been in this industry for a while, with a core focus on financial services use cases and application. specifically around digital assets, payments, central bank digital currencies, and everything else.
And you, June?
Hello, everyone. I'm June, otherwise known as Musashi in the crypto space, and what we are building is an AMM lending market optimized for stable coins. So for us, we believe that fiat-backed stable coins will be a dominant feature in supporting this DeFi innovation cycle. So our goal is to connect like DeFi with traditional finance, and we work with our investors and partners to do so. And yeah, we are launching our V1 product in September 2021, and we're happy to see everyone here today. Thank you.
Yeah, and Max, the floor is yours.
All right, thanks a lot, Katie. Thanks everyone for joining. So it's a hot topic today, stable coins. I'm sure a lot of you are working on some project right now or are seeing them on the news. ConsenSys has been involved with a lot of CBDC projects around the world, in Thailand, as I mentioned previously, where they did a POC with the Bank of Thailand and exploring the technology for retail CBDC. And but before we start, I think it's important to know that we don't have only experts on the field, and people might wonder what is a stable coin. And for that, I might go to the expert Claudio. If you can just make an introduction of what is a stable coin and central bank digital currencies.
For sure, thanks, Max. So I think when we look at this space, there's often like confusion and there's many terms being used in some cases as a synonym for the same thing, meaning a digital token on a blockchain network that represents cash. However, it's very important that we make some distinctions because there's various forms for this, and they have very different connotations. So the first one is central bank digital currency. And when we speak about central bank digital currency or CBDC, we are effectively referring to central bank issued money, but expressed in digital format and specifically running on a blockchain network. Therefore, it's effectively legal tender is issued by a sovereign authority as a central bank or a reserve bank, and it is fully fungible and the equivalent of any other legal tender issued in the country by that central bank. The second form is what we usually refer to as tokenized cash. So this is another option that many blockchain projects have explored in the industry, and it's usually the representation of cash held in a bank account or in a reserve account on a digital ledger or a blockchain network. So a notable example of this is, for example, the JP Morgan coin. Or if we want to look at our region in Southeast Asia, the project that ConsenSys ran with Union Bank a couple of years ago called Project I2I, it's another good example of tokenized cash where pesos, Philippine pesos sitting in a Union Bank account was tokenized and represented in a digital format on a blockchain network. And then the third option, which is probably the most exciting and most innovative one, is what is defined as stable coins. And stable coins actually come in two formats. One is asset-backed stable coins, which are effectively coins natively issued on a blockchain and keeping a stable value because they are backed by reserved and collateral that is expressed either in cash, tokenized cash, like USDC or DAI, for example, or these are tokens that are backed by other assets, which could be other blockchain-based tokens or other tokenized securities. And then within the stablecoin category, there is another subtype, which is defined as algorithmic stablecoins, which are stablecoins that are actually not pegged or not collateralized by other assets and try to stabilize their value by constantly algorithmically trading against other assets on the blockchain. This is like a novel mechanism that actually has created and experienced some issues before, because a few of these type of stable coins experienced losing peg and therefore not being very stable. But it's obviously an interesting construct and something that the industry is constantly innovating on.
Thanks, Claudio, for the explanation. And yes, it's a very hot topic, and I think most of the countries are working on the CBDC projects today. ConsenSys is involved in many of those. So yes, I guess we're gonna see a lot more from you guys coming in the next few months. And but when we are talking about stablecoin, in some ways, it's always related to payments, right? And my next question is for Dylan. I mean, how did you see? What was the experience in terms of payment in Southeast Asia? How did you see the evolution during those past few years? Maybe how stablecoins can fit into that.
Yeah, so I came to China about 13 years ago. There's a pretty big expat and local Chinese tech community in Science Park there in Shenzhen. It's also the same place that Tencent is headquartered. And I got to see kind of really the firsthand what really WeChat can do. You know, they launched WeChat in 2011, and then payments in 2014. You know, at the time, there were very few people actually had credit cards. You know, there's a lot of transfers at the ATMs. Some guys would stand there for hours, like, you know, wiring in transfers from one ATM or one account to the other one. Lots of people carrying around big bags of cash. And, you know, what I would say is that, you know, in a matter of only a few years, you know, it all changed. WeChat really offered simple real-time payments, and the ability to pay for anything really anywhere is powerful. And so, you know, more broadly, we see companies like Grab and Gojek and others follow kind of the WeChat model in Southeast Asia. I think it's kind of natural that, you know, the platform with a large user base, you know, looks to integrate payment capabilities in their ecosystems. Yeah.
Yeah, thanks, Dylan. And, you know, for us, user of cryptos, when we talk about stable coins, we are all using USDC. I mean, USDT, BUSD, right? This is the meaning that we hear behind stable coins. And my next question might be to Musashi, and since you are, I would say, the expert on that field, how do you see the evolution of those stable coins that we are using today? And can you expand on this one?
Yeah, so thanks so much for the question. So I think there are some people who've asked, like, there are a few types of stablecoins, right? And the risk of algorithmic stablecoins. So I would say that what we see now with privately issued stablecoins like XFirst, XSGD, you know, Circle, USDC, or Trust Token, you know, CAD, etc. Like, that is similar to what the private banks did in the past, right? And right now we see CBDCs emerging. And to me, there's this evolving discussion whereby there are different segments, but from a DeFi protocol's perspective, and that's why we want this kind of tokenized money to innovate on payments, right, and etc. Like, to us, CBDCs and fiat-backed stablecoins, they are the same thing. Because either way, right, if let's say I had a CBDC versus a USDC, how I would get in DeFi is I would go to a market maker or an exchange. I would deploy that CBDC. They'll keep it in a bank account in a centralized custody, and they'll issue me the equivalent in the crypto form, because CBDCs tend to be in permission networks. It could be in a permission blockchain. So they'll issue it on the public blockchain. So in the end, it doesn't make a difference compared to like digital fiat. So I think what we see in the US, you know, there was this speech, I can put in a link later, whereby the regulators were talking about how are they going to do CBDCs. You know, they already acknowledge that it exists. You know, there's the success of Circle, right? And you know, without changing the regulatory framework too much, you know, e-money issuers are already prevalent in many countries, and many countries will see like the emergence of a Circle coming up. And what will happen is that, you know, DeFi players and consumers will interact with this. And the most important thing is that these Circle-like players remain regulated. And why it's important is because they preserve monetary sovereignty, which is that the fiat that's issued by the central bank is not jeopardized with an influx of another currency that tries to, you know, populate the economy. And the second point is that fiat remains onshore. So you do not have this issue of fiat leaving the country, which is a big challenge for many emerging economies, especially. And third thing is with all these e-money issuers like Circle or XFirst, there's a KYC element, so you can prevent like AML concerns. So I would say that this is a good thing. And last part with Tether, so far people are able to still get in and out at scale. So until that point is disproved, Tether will still operate business as per normal. So yeah, that's my view.
It's a very good point on the last one, because I think we have many questions regarding the Tether back token. So you said that at some point, at the moment, it's still backed in some ways and allows large withdrawal. What would you see is the event that might change that?
So I think until such time whereby this is with Tether and algorithmic stablecoins, it's all about the same idea, whereby you're using something you're collateralizing X or fiat to issue the equivalent, right? So with algorithmic stablecoins and something like Tether, let's put them in the same idea of collateralization. Their ideas, the concept will fail the moment the collateral is unable to pay out and people cannot exit. And what happens there will be a bank run, which we saw with Iron Financial, one of these DeFi protocols. So when there's a bank run, the whole project will collapse. So until such time there's a bank run that creates this kind of risk, people will still let it run. With Tether, I guess there's a lot more usage, so there's not as big of a FUD there. But when it comes to algorithmic stablecoins, there's Terra, but there's also others like Iron Finance and more. It has been proven that because their assets tend to they track the volatile crypto markets, and when it goes very low, like there are days where it drops 20%, the overarching issued stablecoin assets outweigh in terms of valuation the underlying collateral. So this creates like bank run scenarios which are not safe for the consumers. And I think in Thailand, rejected in a sense. Like you need to pay the consumer of bank run.
Yeah, it's a very good point. It was a big deal a couple of months ago when Terra and one of the teachers in Thailand actually proposed initiatives in different countries. So it's kind of interesting to see central banks are actually replying to this new technology. Today, where we speak with a lot of banks here, and looking at stablecoin with great interest, and because they understand them first, but they also think that it might be an addition or a disruptor or their business in the future. So can you give us your views on how basically stablecoins are changing the financial sector?
Experience at ConsenSys, we've been working on stablecoin, tokenized cash, and CBDC projects for a few years now, with multiple central banks in Asia, but also in Europe and in. So I realized that stablecoins represent a new form of money that actually has some new properties compared to traditional payment channels and e-money solutions, because it's by definition more programmable compared to what can be done today with legacy payment systems that can only be integrated by APIs, for example. The benefits of a currency that is in itself programmable means that you can start defining rules by which the currency is transacted, or you can also define criteria by which the currency is distributed or accessed by individuals and businesses, so that it can fully simplify and automate many of the currency issuance and distribution mechanisms, and also monetary policy activities around it when you look at it from the side of the central banks. Then that's just for the currency in itself, and the currency is a payment method. Then there is another element that is becoming more and more interesting for banks around the globe, and that's the ability to obviously have this new digital currency interact with other digital assets. So, for example, in a project that we have been developing here in Australia with the Reserve Bank of Australia and some of the local commercial banks and financial institutions, we've been testing how a central bank digital currency can be programmed to interoperate with a digital syndicated loan so that it can be used to streamline the process of funding the loan, settling the loan when it comes to a drawdown or a novation activity, and finally automating some of the loan repayments as well. So we start seeing a lot of potential for this digital currency to actually intervene in the asset life cycle and streamline many steps of the asset life cycle to drive efficiency in the market.
Thanks for your views, Claudio. And indeed, it's going to be very interesting to see in the next few months how those stables are integrated. And I would like to go back to Dylan, and you know, we heard from you about payments, but what is your view on actually how the stablecoins evolution?
Yeah, you know, I had some thoughts on this when I prior to this conference, and you know, really what I think it comes down to here is really real world use cases. I think that we need to get to a point where we're facilitating lending, we're doing international remittance, but we're doing all this in a way that's provides the same security and really opportunity that we get from kind of the traditional systems today. You know, it didn't happen overnight. You know, the U.S. used to be on the gold standard. I know one of my colleagues on the panel here was discussing about some of the backing and some of the kind of runs on the banks. And I think that you know, the gold standard happened until basically there's a time in which there's a recognized trust, and so I think that Tether and some of these other ones in a way are establishing that trust over time. They did it first with the backing, but I think over time, kind of as Bitcoin's also done, that becomes kind of less important, and people's belief that no matter what happens, it has a particular intrinsic value.
Thanks for your views, and indeed, and I have a questions that actually a lot of people asked me prior to this meetup. Today, you see interest in stablecoins in different DeFi protocol or CeFi protocol to range between 3 to 10%, and people are actually questioning the fact that why would I keep cash in the bank and I'm not withdrawing my cash and transfer it to stablecoin to earn those kind of yields. I would like to maybe, June, your view on this one. Do you think it's sustainable? Do you think it's something is going to last? Or the more people are adopting those protocols, the yields are going to be lower?
Oh, I think the whole point about DeFi protocols is the magic there is programmable money, right? So to take that example, like if we were to use like how I would change money at an airport right now is I would go to an airport, I'll give the person cash, the person would, you know, probably bring it physically to the bank or digitally wire it to the bank to settle, right? So there's a human element involved. It's all about cost. So when you think about like the average banking size of a major bank, it tends to be between 10,000 to 50,000 staff doing all this work, which is mainly settlement. And what DeFi has done, you know, when we look at it, is that especially with Uniswap and Sushi, right? You have a team of 20, you know, automating this entire settlement process and managing billions and infinitely scalable. So what happens there is the cost. Why is there the yield, right? The yield difference is really because the cost of not paying 5,000 people has been transferred onto the consumers. So that's what DeFi is really about, right? But can DeFi like totally replace the existing fintech ecosystem? I don't think it can. There's this huge element of integration, right, and distribution, which DeFi, as it is right now, doesn't have, and it's not designed to do. Because when you build a protocol, you tend to focus on very narrow use cases, which is not very simple to adapt for complicated things and like complicated use cases, which you know, a DeFi protocol cannot arrange like a $500 million loan and assess the creditworthiness of a borrower, for example. That's not what DeFi can do, and that's not what it claims to do. So I think for basic things it can, And what will happen is that traditional companies will, or at least traditional fintech will build on top of these liquidity networks to expand their use case and give people these access. So I think it's very sustainable. And what's more important is to facilitate that kind of knowledge sharing and partnership, which is what HaloDAO is about.
Thanks for your views.
I think that's a good point also he really made about I think one of the deficits we have with the DeFi protocols today is that there really isn't a credit facility that allows, most of the loans are all collateralized. So the average person wanting to be able to come and get a car loan using DeFi probably doesn't make sense for them to go and acquire a bunch of stablecoin, upload it to the platform, and then ask for a loan on top of it. Unless they're getting some kind of yield off of that. But yeah, I kind of agree with what he was saying.
Okay, and Claudio, maybe your views on this part?
Yeah, I think. Oh, sorry, I missed myself. I think what both June and Dylan was saying makes a lot of sense, and obviously, we will continue to see more DeFi protocols emerging and more possibilities at this stage, while the industry is still growing to, capture interesting rates and rewards by participating early in these protocols. It will be interesting to see the evolution of the market in these scenarios. But if there's one thing that these DeFi protocols have already proven for sure, is that effectively you can replicate many of the financial transactions that we see in more traditional financial markets in more automated and disintermediated ways and models. And I think, many traditional finance institutions and commercial banks and regulators have taken notice of this, and they're actually, studying this type of protocols and new solutions for two reasons. One, making sure that they don't put at risk hard-earned money of consumers and businesses across the globe, but two, also to really understand the benefits and being able to replicate some of those benefits with more mature and regulated solutions over time.
And thanks for your views. And I agree with the three of you. The thing is that what June was mentioning is that DeFi cannot do anything, but I think we are still early, right? DeFi is actually quite new, despite the fact that for us it's kind of old, but for most of people it's something they have never heard about it. So we see new protocols, new way of actually using stablecoins, and I think they are going to pop up more and more during the next few years. So talking about that, continuing on the stablecoin subject, we talk about payments, right, a bit with Dylan, but how do you think the big ones like Visa and others are actually preparing for this new type of assets? And are they going to integrate it like they are doing with any currencies, or this is going to be a separate business? Can you give us your views on that?
Yeah, I can talk a little bit about that based on. Oh, sorry, were you directing the question to?
No, go ahead, Claudio. We'll hear for Dylan after. Yeah.
Yeah, sorry about that. I mean, my view in summary is that we're seeing a lot of the major payment processors and payment service provider adopting cryptocurrencies as a mean of payments. And so in many cases, this is the equivalent of just adding another currency to their offering and another currency pair when it comes to cross-border transactions. But I think what's going to be more interesting and something that will come as well in the future is how these payment service providers start offering more services and more advanced capabilities on top of blockchain-based assets. I don't think right now we've seen much of it yet, but for example, PayPal is rumored to be launching like a crypto super app very soon that will leverage cryptocurrencies at their core more than just payments. So yeah, it's going to be very hot space in the coming months and years.
Dylan?
And sorry, Dylan, please feel free to add.
Yeah, no, I mean, I think when it comes to this, I think that today, like AI and machine learning on the next 20 or 30 years. I look at it as the same ones that kind of aren't looking at cryptocurrencies are going to be in a similar position. It's kind of like, you know, not going the route of digitization many years ago. And I agree with what some of the things we're talking about, like Visa, MasterCard, you know, they recently came on and announced that they'll be integrating cryptocurrencies, I think by the end of the year. You know, we've got major retailers are adopting payments through Bitcoin, and I think Amazon's also kind of hinting at in a couple months. I think the biggest thing that people can prepare for is the onslaught of regulation and compliance. I've spent a lot of time doing this myself over the last year. You know, if you're going to be doing cryptocurrencies or crypto-based companies, is to understand what all the compliance is, what the regulatory frameworks are in different places. You know, as you can see in the U.S., you've got to get licenses in every state in order to do a lot of cryptocurrency business. I would say the biggest thing that people can do or companies can do to prepare is really begin to understand about what the regulations really are. I see. I guess one other point too is when I deal with a lot of companies today, that they seem to shy away as soon as you mention the words stablecoin, cryptocurrency, even distributed ledger technologies and things like that. So I think what companies need to do is get better educated really about, you know, the cryptocurrency companies aren't necessarily ones that are illegal. There are ways, you know, blockchain is something that banks are beginning to use. That's going to be integrated in every company going forward. So I think the key here is education, as well as understanding about the environments in which we're operating in legally.
Thanks, Dylan. And before going to June, I have a question for Claudio, actually, because we have been talking about that. I mean, stable coins, there is companies, banks, financial institutions looking at actually creating their stable coins. How can ConsenSys help them with that?
Sure. Yeah, great question, Max. So we have been building over the past few years a lot of knowledge and IP around blockchain-based digital currencies and payment solutions. And throughout the course of a number of different projects and experiments, we've also been developing a product called Codify Payments, which is effectively a set of APIs that can be used to easily configure a digital currency and then distribute it through various users and wallets with advanced distribution models and mechanisms. So this payment sandbox, as we constantly refer to it, it's actually the perfect place to start experimenting with blockchain-based payment solutions and currencies. It comes with configurable API, so it can be easily integrated with other applications for various purposes. And also comes with the support of our team that is one of the most advanced teams across the globe when it comes to this type of projects. So we are very open to collaborate with many parties in the ecosystem that want to experiment with this type of systems.
All right. Thanks, Claudio. And the question we have, we see June actually replying a lot of questions in the chat. So thanks a lot for that, and with very valuable information. So I suggest that you check some of his replies. But the questions that we have here is that the day that, for example, in Thailand, the central bank is going to have a digital currency, or when China is going to have one, a lot of people are saying all those stable coins like USDT and so on will not be will be useless. What is your view about CBDC and stable coin coexisting?
I think the best is just to show everyone. So let me share the screen.
Sure, go ahead.
Oh, could you let me be the host to share screen, please?
Nice. Is it a movie?
Oh, I think that
should be it.
It's just to look at Uniswap, right? On Uniswap right now, you get Singapore dollar and you can swap it for euros, or you could swap it for like USDC. So what this means is that, you know, whether or not countries set up like a CBDC, as I said, like I find as a very overcomplication of the activity, because CBDC is like a digital form of fiat. And there is already digital fiat. Most money in the world exists as in digital form. So what is going to happen is very simple. Like either the central bank wants to issue the stable coin on the public Ethereum networks, which it might do over time as it builds confidence. Else, a private player such as Circle or X First in Singapore or Trust Token in Australia will do it first and demonstrate that usability. So stable coins are merely a representation of fiat value in various currencies. So whether or not CBDC is there, it will always be able to convert into like some sort of stable coin on the public network, and that's where the innovation is, right? If it's not on the public network and within a private network, it will remain as digital money. And already, I would say digital money is extremely sophisticated, right? We can have e-money transfers that are in seconds. So, on that note, it's already very efficient and very successful. So I think the main focus or the debate is always about, do we go public or do we stay private? And if we stay private, the answer is this will just be treated as digital money and will be swapped for the equivalent in the public space. So that is a simple, I think, trajectory that the market is going towards. And the US, I think, has already accepted that that's a reality. So I could put the link to the speech there and people can take a look. But, it's a reality that regulators in the US have accepted or acknowledged. And the main point is how are they going to do it themselves, right? And CBDCs, the real advantage is really because when you custody this fiat, there's always this protection, right? If a bank collapses, there'll always be this amount that they will pay back. But from what we see, people in the consumer space do not really, they can live without this protection, so to say.
If I may add to what John was saying, I think I'm aligned with him when he talks about the public retail space versus the more private usage of central bank digital currency, for example, in the context of capital markets. The two spaces will continue to stay separate until a central bank introduces CBDC that is fully compatible with the Ethereum mainnet or any other public blockchain, because effectively there is a lot of activity and experimentation happening in those public chains. Right now, there's no option at all to use a regulated or central bank issued currency on those systems. So we will continue to see stable coins being used in those DeFi protocols and on mainnet Ethereum. However, something that will be directly impacted, in my perspective, from the introduction of CBDC will be all those private stable coins that are being issued specifically by commercial banks and financial institutions for the purpose right now to fill the gap in capital markets that is created by the lack of blockchain compatible digital currencies issued by central banks. So right now, many commercial banks are introducing private stable coins because they need a mean of settlement against, let's say, a digital bond or a digital when digital currency stable coins will not longer be relevant, because you will always want to settle against central bank issued money, which is obviously the one with the lowest risk profile in the market.
All right. Thanks, Claudio. Maybe Dylan, you want to add something here?
Yeah, I guess I'm a bit of a traditionalist. I actually think protection is important. I think China illustrated that when it put out some recent regulation when the market was booming here recently, and saying that No insurance product could be placed on any stable coin. I think that protection is important for governments. I think it's important for corporations. I think it's important for users of potentially of money. With that said, I think that we've all been hoping for crypto to get large scale adoption. We wanted governments to accept it, regulate it as necessary, but support this kind of new digital way of life that we've got. But you never exactly expect how it's all going to work out. Now we've got governments here; they're creating CBDCs. We've got investment funds. We got big corporates staking Bitcoin. I think for some countries like El Salvador, they're adopting Bitcoin as one of their native currencies. Others are going to adopt their own CBDCs. But I don't think that CBDCs are necessarily stablecoin killers. I think just unless the regulation that comes along with that hits them kind of in a bad way. I think basically what I'm getting at here is that there's going to be, I think in the future, there's going to be two types of people. One that wants the freedom that goes along with this global currency. And I think the second part is maybe the other ones that just want to be able to use their money in a safe and secure way. So I think it's okay. I think they'll probably coexist.
All right, thanks. And people always ask, and I said, what's the point of a CBDC? And on my point of view, having a CBDC will allow users to actually have wallet on their phones. When we talk about global adoptions, we need to have everyone to have basically a digital asset wallet on their phone. That might be one point which actually is going to push the adoptions of crypto overall. That's remain to be seen in some ways, but that might be one of the output. And
they said that China's CBDC will be the largest currency market in the world, and I think that probably China will look to probably sunset its physical currency in lieu of using something that's entirely trackable. So I think they're the first one out of the gate, and I think they're going to be the real winner with at least the CBDCs for the early term, maybe not long term.
Actually, yeah, and that's going to link to a question that I have for June, because you were replying to this point in the chat. What's going to happen if China has a CBDC? How is it going to interact with other currencies or other CBDCs? We are talking about maybe interoperability.
It's a very interesting question, right? So the main point that China is doing is that they want to. The whole point, at least for China and many of these emerging economies, is that they want to preserve capital within their ring fence. At least that's the starting point. I think we need to recognize that CBDCs is just one of the ways they try to control their money supply even tighter to prevent capital flight. So when we look at DCEP, like, does it solve an issue to solve their main concern, like exacting more control over people's money? I think it does, but it doesn't stop capital flight, because when there are very motivated people, they will still, and you can see like USDT volumes in Asia are at least the highest, right? So it's very strange, right? When we look at China, India, and all these countries which have controls of capital flight, the more they try to control, it doesn't really affect the people who what are very motivated to bring money out. Either they do it from crypto or other nefarious means. So you can't stop that. So I think more importantly, with DCEP, what we see is that there's an acceptance to explore. But one thing they'll do is, as the US has seen, China will start realizing that they do not want the US to have an outsized control over the crypto market. Because right now the entire crypto market is denominated in USDC and USDT. So this is not just an issue of financial markets, but it's actually an issue of geopolitical influence. And countries will start realizing is that if they do not allow their currency to be on the public blockchain like the US has done, they're actually going to lose out on this innovation, and their people will be locked out. So like all these things that will trickle down, like financial inclusion, etc., it begins when the market goes onto the blockchain. And for the reason that I explained at the beginning, is that the public blockchain allows you to have humongous cost efficiencies in terms of settlement. And when you have the liquidity networks, then you have startups being able to build on them to provide more utility for users, which is something we see in Philippines, whereby 60% of the users there play Axie Infinity and are able to earn a living, especially during COVID. And this is much more, the amount of money they earn playing Axie is actually more than the amount of money that they would earn if they went abroad to work. So that's incredible, right? So for countries like Philippines, Thailand, or in Asia, I think they will be the forefront of transformation. And we'll see other countries like Latin America evolving, but this is very, very fast. Like already I have spoken to people in Turkey. There's a Turkish lira stablecoin called ByLira. In Latin America, there's an issuer doing a Brazilian real, etc. So countries that do not catch up, they're going to be behind.
I totally agree with that. Exactly, Dylan, as well. I mean, this is technology, right, evolving, and then countries need to follow. But following off what you said about China, Claudio, you guys are building different CBDC projects in different countries. How those countries are looking at what China is doing? Are they looking to catch up? Are they looking to be interoperable with it? Or can you expand a bit on this?
Yeah, absolutely. I mean, obviously, everyone in the region and globally is observing the CBDC projects in China being rolled out with lots of interest and attention. It's still difficult to find, good information and data around it. So I think everyone is waiting to see more results and data coming out and being published and shared. But for sure, the regulators and central banks we're working with in Asia have an interest to understand how their local CBDC initiatives can interoperate with other CBDC initiatives. So, for example, the project that we're currently developing in Hong Kong with the Hong Kong Monetary Authority is a prime example of a CBDC project that is looking at interlinking many different central banks and establishing effective corridors for CBDC transaction denominated in different local currencies. That project is already looking at collaboration with the Chinese CBDC, and also there are many others that will open their internal knowledge and internal experiments to integration with other CBDC projects. So we definitely see that the future of this project that starts in isolation will be a future whereby many of these projects integrate with each other so that they can drive regional exchanges and regional economies.
So you think we'll end up with new exchanges similar to what we already have in the crypto sphere? We'll just have more CBDC exchanges?
I don't know to what extent it will be decentralized. I think it will still very much be in the context of private blockchains that are controlled by non-entities and operators, but will certainly be more decentralized in the context that these exchanges will be automated by a set of contracts that have been agreed upon by different banks, and that will facilitate the conversion and transmission of money in a more fluid way. Hopefully, at some point, we will move to globally scaled infrastructure that can really interoperate and facilitate this type of exchanges at the global level.
Yeah, I think so.
Yeah, great. Thanks, Claudio, for the view. And as it's almost time, but I would like you guys to wrap up with your personal view, if you can, on where do you see stablecoin going. We talk about a lot of different things today, but just to wrap up, Dylan, can you give us your view? What do you expect for the next few years in the stablecoin market?
Yeah, I think there's going to be a bit of a battle that's going to happen between stablecoins and CBDC. I think you're going to see some countries that really embrace stablecoins, some nationalize them, kind of like El Salvador with Bitcoin. I think others will probably create their own and then just try to regulate stablecoins out of existence within their region. I think because of that, we're going to see a lot of privacy-based stablecoins, kind of like what Monero was. I think really if I look forward, what I hope really happens is that we end up with more of these kind of global stablecoins that are built from a basket of assets, like what kind of what Libra DM was going towards. It's also what I'm working with ConsenSys right now on with BAXE. So.
Thanks, Dylan. And yeah, June, if you want to give us your conclusion wrap up.
Yeah, thank you. So I think my point is that for me, I'm a DeFi player. So why I like this is because there are already many stable coins out there and many more appearing, like even Japanese yen, Turkish lira, etc. So for me, it's about how can a regulator not reinvent the wheel, or how can as a people here, I think we're about how can we push the innovation without breaking the wheel, and that is just by working with existing e-money issuers and bringing this fiat into the ecosystem, right? And let it run. And as we see it mature, regulators and other consumers will find confidence and they'll participate. So like the best example is BAXE. Like last year in July 2020, there was only 500 players, and now you have 500,000, right? So people will just come in when it works. So we just have to let it evolve. And more importantly, DeFi founders will be the ones who champion this change, because we are building the liquidity networks so that this works. It works. And yeah, if anyone wants to connect with me, I put my Telegram chat in our chat group. So if you want to message me, I'm there. Look forward to seeing you.
Thanks. 100% agree with you. And yes, Claudio, to finish, can you wrap it up with what's your view?
Sure. I think my view, and as a testament of the excellent discussion that we have today, is that the industry will continue to innovate no matter what, and innovation will be coming in different forms and from different angles, from the DeFi space with stable coins, and the traditional finance space, the payment system providers, commercial banks. All this is very important, and actually what is most exciting is that this innovation is continuing to happen and accelerating day after day, and at some point will lead to convergence and to the creation of a new financial system. And so I think we just have to accept that and be part of it, and follow the path of innovation, because innovation is progress, and that's where we're all going.
We're early.
Thanks. Yes. Well, what we have seen those past, just I would say less than 1 year, the interest about stablecoin from financial institutions is night and day compared to what we've seen in 2020. So I guess it's going to be faster than we expect. I would like to just add one thing for the people watching us on Facebook. Atato is not giving 3 Bitcoins. We are spammed all the time. So please be careful with all those things. I prefer to mention it. It's not us. It's a fake account. We try to block them. And the thing is that Cathy, I think, has a last thing for our panelists and for our attendees before wrapping it up. Cathy, are you here? You gave up already?
Yeah. I don't know why I cannot share my screen. Okay.
Okay.
Yeah, so I couldn't share my screen. I don't know why. Can you see my screen before?
Yeah, but apparently it's not working at the moment. So, anyways.
Okay. Yeah. So thanks for everyone joining. Yeah, and so this is the end of the webinar, and we hope to see you next time.
Yeah, just one thing that we organize those meetups, free meetups online every month with the Bangkok Blockchain meetups. We really appreciate you, Claudio, Dylan, and June joining tonight, and to actually share your knowledge with all our community, which is not only from Thailand but all Southeast Asia and Europe, as I see from the attendees. As you mentioned, Dylan, it's all about knowledge and educations, and that's why we are doing those events. Really appreciate your busy time. It's an honor. So thank you so much, everyone, for joining. And we're going to talk about digital asset next month on the Bangkok Blockchain meetup. So thanks a lot, everyone. I hope you had some good knowledge, and we see you next month. Thank you. Thank you, Cathy, for organizing.
Thanks, everyone. Thanks, Max and Kathy, for organizing.
Thanks, everyone.
Thanks, everyone.